Morgan of SunWest Mortgage is here to change the world of loan originations forever. From sending updates to your clients to allowing you more time, you can do it all in a simple chat. You no longer have to struggle with documents. All you need to do is select the files and upload them, and they're submitted in an instant along with your loan file. With SunWest, your true home is always within.
Welcome to The Interest. I'm Mike Savino. I hope you all had a safe and happy Thanksgiving holiday. Now it's back to business, and of course things can be slow right now as buyers' attention is pulled in so many directions during the holiday season. That means originators need to get creative about where they find loans, but for some borrowers that means overcoming religious restrictions about things like paying interest. Our own Katie Jensen talked with one Islamic lender about what they're doing to help people overcome these restrictions and buy homes.
It stems from kind of going back to inequality and it just not being the most fair distribution.
For some people, religious beliefs get in the way of taking out a loan. Islam, for example, has rules against paying or collecting interest.
There is a large demographic within the community that, feel that, they don't have a means of buying a home.
Of course, that makes homeownership incredibly hard in the U.S., where most people rely on a mortgage to purchase their home. But some lenders have come up with creative ways to finance homes in a way that's Sharia compliant.
And the whole concept goes back to, both parties involved in the transaction need to have some skin in the game, right? There needs to be some element of some shared risk.
Chicago-based Devon Bank has two options, one being Murabaha. Here, a buyer picks a home and the bank buys it from the seller. The buyer and bank then agree on monthly payments.
Therefore, technically, it's not even a loan, right? Because you're not borrowing money to buy the home. You're instead buying the home directly from us at a fixed marked up price.
A second option is musharaka, which is when a buyer and a bank co-own a home. The buyer slowly buys out the bank to take full ownership.
So you're slowly taking more ownership in the home as you make your monthly payments.
Regional Vice President Ali Farouk says Devon Bank does pay attention to things like the 10-year Treasury bill when coming up with payments, just as traditional lenders do when setting rates. Unlike other mortgages, though, these loans don't have a secondary market. Devon Bank also has a Sharia council to make sure any product meets religious requirements.
So it's important for us to be able to go back to the scholars and make sure that the policies that we're following are compliant.
Devon Bank is licensed in 34 states. Farouk thinks there's potential for Islamic lending to grow, but if other lenders want to offer products, he urges them to do it the right way.
The last thing you want is for every bank in the corner to be offering it and not doing it properly, and then all of a sudden the whole Islamic finance just gets tarnished.
You can hear more on Islamic lending on gated communities.
Thanks, Katie. In other news, some of the hottest housing markets during the pandemic are now seeing prices cool at a faster pace. For example, home prices in Austin, Texas jumped by 24% year over year in February, but by October, we're growing by only 1%. That's a 23 percentage point change, the largest in the country over that time, according to Redfin. The rest of the top 5 markets with the biggest changes include Phoenix, San Jose, California, Las Vegas, and Boise, Idaho. Redfin says this is because the double-digit growth rates in those hotspots was not sustainable. But with those market corrections, some buyers may be able to take advantage by negotiating better terms. This shift is not being felt the same nationwide. Markets like Albany, New York, Bridgeport, Connecticut, and McAllen, Texas are starting to see price growth taking off. All 3 metros saw prices climb at a slower rate earlier this year. Coming up, a real estate agent and a lawyer are facing jail time for mortgage fraud.
Don't miss the largest regional mortgage show in the nation. The New England Mortgage Expo returns to Mohegan Sun in Connecticut, January 12th and 13th. See us at www.anymortgageexpo.com. Start your year with the best connections in the industry. Dozens of sessions, scores of exhibitors. It's where success is written every hour. www.anymortgageexpo.com.
Welcome back. 2 New Jersey men are facing up to 30 years in federal prison after admitting to their roles in a $4 million mortgage fraud scheme. Real estate agent Victor Santos and lawyer Fausto Samoas pleaded guilty last week to conspiracy to commit bank fraud after getting mortgages with the help from fake buyers. The two men used these buyers' identities and credit to purchase 12 homes in Newark in 2007 and 2008. Santos and Samoas agreed to pay the straw buyers at least $5,000 each. They also offered to find tenants to lease the homes and to offset costs, including mortgage payments. Samoas did 10 of the closings, and authorities say he lied by saying the buyers were providing cash required at closing when in fact he was getting the money through a shell company controlled by Santos and another person. But Santos and his conspirators didn't make the mortgage payments, and the straw buyers didn't have the money to pay those bills. The two men are facing up to 30 years in prison when they're due for sentencing in April. The two other participants also pleaded guilty to their roles and are awaiting sentencing as well. And finally, an analyst is correcting a report that caused Rocket Company's stock prices to drop earlier this month, but the correction isn't enough to change his outlook of the company's stock. Kevin Heel of Argus Research changed a report last week to reflect that Rocket is pooling $9 billion in loans that it's planning to sell in the near future. He previously claimed that Rocket was having a hard time finding investors, but Rocket said that's not true and requested the change. Heel did not change his view that shareholders should still sell their Rocket stock. After Heel's initial report on November 16th, Rocket's stock price fell by 12% to $7.38 per share. The stock rebounded in the middle of last week, closing at the week at $7.78 a share. Heel is one of 3 analysts to rate Rocket stock as a sell, according to MarketBeat. That's compared with 8 who recommended investors stay put. We'll be right back with what else is interesting today.
The Originator Connect Network, connecting you to the story of your success. Find an event near you at originatorconnectnetwork.com.
Welcome back. Here's what else is interesting today. Mortgage lenders are facing another challenge, a dramatic increase for credit reports starting next year. According to the National Consumer Reporting Association, the increase is being dictated by either the 3 national credit bureaus or Fair Isaac, better known as FICO. According to a letter to mortgage lenders, the increase will be less than 10% for the top tier of lenders, a group of 46 companies. 6 more lenders are in that second tier with an increase of 200%. Everyone else is looking at an increase of 400%, according to the letter. We reached out to FICO, but so far we have not heard back. The NCRA says that it's not sure why the increase is happening because FICO isn't talking, and neither are the 3 credit reporting bureaus. For more on these and all of today's top stories, go to mortgagenewsnetwork.com.